What's going on, guys? It's Andy here. Welcome back to another episode of the Andy Kandola Show. So in today's video, I want to go ahead and share with you guys 6 stocks that I'm currently buying, as well as 1 stock that I'm getting rid of in my portfolio. In this video, guys, I want to go ahead and share with you guys a portfolio update. There's 3 different sectors that I'm currently buying in. I want to go ahead and share with you guys the 6 stocks in these sectors and why I'm buying all 6 of these stocks, plus the stock, unfortunately, that I did have to get rid of, and I'll share with you guys why I had to go about doing that as well. Now, here's the thing, guys. If you're investing in the stock market right now, the stock market is slowly climbing back up, but for the last month or so, it's been trading sideways. If we just look at the Dow Jones today is right around that 28,000 mark as far as where it's trading at, but it's been trading sideways, and I believe it's still going to trade sideways or even go 10 to 20% lower until the election. Elections are around the corner here, but I do believe that we are going to be trading sideways for a little while. So if you are considering investing, obviously invest at your own risk, but maybe not a bad time to go ahead and dollar cost average into the market, and that's exactly what I do. Now, additionally, guys, if you are new to this channel, I do have a bucket list portfolio, which is my dividend growth stock portfolio, which is the primary focus that I focus on sharing on this channel and all the investments that I have in this portfolio, and basically go ahead and document every step of the way as this portfolio grows over time. Now, I started this portfolio with $1,000, and currently, guys, as of this week, we are sitting at $68,983. Now, just in this last day here, the portfolio is up $415 or 0.61%. In the last week, the portfolio is down $1,467 or about 2%. In the last month, the portfolio is up $1,576 or 2.42%. In the last quarter, portfolio is up $3,398 or 6.14%. And then all time, guys, we are up $6,266 or 16.46%. Now, because all the stocks in this portfolio do pay me out a dividend, just in this last month here, these are all the different dividends that I've gotten in this portfolio. On the 16th, I got a dividend from Medtronic. As we can tell here on the 15th, got dividends from Store Capital, Realty Income, Pembina Pipeline, Ecolab, Main Street Capital. Now, with Main Street Capital and Realty Income, those are monthly dividend payers, as well as Pembina Pipeline. So these are actually the 3 monthly dividend payers that I do have in the portfolio, as well as we got dividends from Altria Group, and we got dividends from PPL Corporation and Nike. Now, these are just all the dividends that I've gotten just in this last month. I do go ahead and reinvest this money right into the portfolio to go ahead and build me additional cash value. Now, in regards to the stocks that I'm buying and selling, let's go ahead and have a look at that. Now, I do have this portfolio with M1 Finance. The nice thing with that is I can go ahead and break it down into different sectors. So the way I like to organize this portfolio is I have it broken up into the 11 different sectors within the S&P 500, and I have it weighed accordingly. So technology, I weigh in the most, and then going down from there. But going into the stocks that I'm buying and selling. So let's go ahead and start with real estate, because real estate, I am actually buying 2 stocks in real estate. Within real estate, guys, I am buying in Realty Income and Store Capital. Now, here's the thing. Real estate is currently down because of this pandemic, and especially commercial real estate. With Realty Income, they are a commercial landlord. Basically, they are a retail landlord. They have multiple different plazas, and they have investment grade tenants like Walmart, 7-Elevens, Walgreens, etc. Now, in regards to Realty Income, in my current portfolio, I have about $5,700 in current value, and I'm up about 9%. But if you look at the stock, currently the stock is trading at right around $59, and anything under $60 is honestly a buy in my opinion. I'm buying the stock, and I'm going to keep dollar cost averaging into the stock as long as it's under $60. Now, in regards to my portfolio, my average share price in the stock is $56.47, and I do have right around 97 shares, so I'm getting close to that 100 shares mark. But Realty Income, because of this pandemic, it's just been kind of trading sideways for about the last month, or even trading down a little bit. If we just look at the last month, they're down about 5%. Last 3 months, they're trading sideways. Basically, they're up about 3%. So this is a stock that I'm going to be aggressively buying for the remainder of this month, as long as it stays under $60. Now, additionally, if we go ahead and go back into the portfolio, the other stock that I'm currently buying is going to be Store Capital. Now, Store Capital is a new position that I recently added in this portfolio. So this is a stock that I'm currently focused on buying as well. My current value in the stock is $1,337. I'm up about 1%. But Store Capital has been kind of trading sideways. It's trading right around that $27 mark. My average share price is $27. If we just look at Store Capital's details as well, in the last month, Store Capital's down about 7%. And if we just look at the last 3 months, Store Capital's actually up about 18%. The nice thing with Store Capital is I do like their dividend. Their dividend is over 5%, so it's 5.18%. But Store Capital, unlike Realty Income, focuses on smaller tenants or mid-level tenants. So they're not investment grade tenants, but they're more focused around the single-use tenants. Plus, with this strategy, because Store Capital does not have any one tenant that they need to rely on, they can basically go ahead and turn over those locations in case they lose one of their tenants, and they're able to easily rent it out. So I do like to go ahead and invest in this company, and as long as they're trading at right around that $27 range, I'm gonna go ahead and keep dollar cost averaging in the stock. So these are the 2 stocks, guys, within the real estate sector, but in total in real estate, I do have 5 stocks. But now let's go ahead and jump into the next 2 stocks. Now, the next sector that I'm currently buying in is going to be in the communication sector. Now, within communication, this is one of those sectors that doesn't have a lot of growth potential, but it's a sector that pays high dividends. Now, the 2 stocks I'm investing in is AT&T and Disney. Now, here's the thing. With AT&T, this is actually one of the stocks that has some of the highest dividends out there. My current value in AT&T is $2,730. I am down overall about 12% in the stock, or about $200, but this gives me more of a reason to go ahead and dollar cost average my way down, because AT&T right now is trading at $26.76 and my average share price is $29. Now, I do have over 100 shares at this point, so I have 102 shares. But here's the thing, with AT&T, because of their business model, they've had many things that have impacted their sales, but I do believe AT&T is pandemic proof because of their wireless communication sector. AT&T has an essential business that they can go ahead and focus on. Plus, if we look at the dividend yield, AT&T's current dividend yield is almost near 8%. Their dividend yield currently is 7.74%. So another stock that I really do like in this portfolio that I'm going to go ahead and keep dollar cost averaging to go ahead and bring down my average cost on this stock. Now, additionally, along with that, I am focused on investing in Disney. Now, Disney is another stock that I recently added in this portfolio as well. My current value in Disney is $1,140. I'm currently down in Disney because I actually started buying when Disney was going up. This is a stock I actually had in my portfolio when I started this portfolio over 6 months now, but I got rid of it because Disney cut their dividend. But then I did decide to go ahead and bring this company back because I believe in their future. Now, Disney is the only stock in this portfolio that currently cut their dividends, that did not bring it back yet. But the reason why I invested in Disney is because Disney has multiple streams of income. Their theme parks are currently closed, so once that business comes back, I believe Disney's stock price is going to go ahead and grow. Plus, Disney is starting to go ahead and focus more on their streaming service with Disney Plus, with Hulu, and with ESPN. So this is a stock I believe has a strong growth potential, and another stock that I believe once they bring back their dividends, they're going to be able to consistently hold their dividend and grow their dividends. Now, in regards to Disney, my average share price is $131, and I own right around 9 shares of this stock. But this is going to be the 4th stock, guys, in my portfolio. Now, in regards to the other 2 stocks that I'm currently buying, the other 2 stocks are actually going to be in consumer discretionary. Now, in consumer discretionary, there's one brand new stock that I just added. So I want to go ahead and share that with you guys, and that is going to be Target. Now, if we look here, Target in my portfolio currently is valued at $0 because this is a brand new stock that I'm going to go ahead and add in this portfolio. Plus, another stock that I recently had added is Domino's Pizza, which is another stock that I'm heavily going ahead and buying into for the remainder of this year. But in regards to Target, my reasoning behind Target is I'm actually investing $200 in the stock, but really, the reason why I really like Target is because their overall business model. Since the pandemic, this stock has only been going up, and actually just in the last day here, they hit their all-time new high at $167. But if you just look at their overall 6-month trend, I mean, we can just see that the stock has consistently just gone up. And if you look at the last 1 year, since the pandemic, their lowest they went was about $94, or maybe they went a little bit lower to about $91. And then since then, they've been just climbing up. Now, the risk that I'm taking taking with Target. I am buying it at its high, but it's a long-term game and it's a long-term strategy, so I'm comfortable holding the stock for the next 10 years. And with Target, they do pay out a dividend, so their dividend is 1.61%. The PE ratio is 23.57%, so it is a little overvalued at this point, but like I said, it's going to be dollar cost averaging and investing in this long term. Now, Target has a strong ecosystem, and that is one of the primary focuses on why I'm buying this company, is because my wife shops at Target, my sister shops at Target, and anybody I've ever talked to about Target has nothing bad to say about this company, and they actually like shopping there because of their experience. And with Target, I believe this company has such a strong brand that even if they got into the e-commerce space or into the online retail space, they will do well. So Target has this customer base that can really follow them and that will really follow them wherever they go. So it's another ecosystem type of stock, and I like focusing on stocks that have a strong ecosystem around it, that have a strong brand around it, and basically can go ahead and use their word of mouth to go ahead and grow their business. So this is a stock that I'm going to go ahead and invest heavily in. I have about 10% of my allocation in the stock within my consumer discretionary sector. Now, additionally, guys, I am investing into Domino's as well. Domino's is another stock that I recently went ahead and bought into. Again, I am still down in the stock about 7% or $22. My current value is $372. But with Domino's, when it comes down to the food industry and really who's captivating on the food industry during this pandemic, Domino's is coming out stronger out of this pandemic. And I believe within the restaurant sector, there's companies that are coming out better, and there's companies that basically are not able to go ahead and survive, and Domino's is a company that's going to go ahead and come out stronger, and they're going to be able to go ahead and take advantage of more of this market space in this sector. So this is going to be the other stock that I'm actually investing in. Now, in regards to Domino's, my average share price is $418. The current shares in my portfolio, I don't even have one share at this point, so I have currently 0.94 shares, but I am going to go ahead and dollar cost average because Domino's is down at $394. So another stock I'm going to go ahead and buy into, and I currently have a pending order for $100 in this stock. And as you can probably tell here, guys, is I do focus on dollar cost averaging. I do focus on going ahead and investing a certain amount every single week in my portfolio. So if we just go ahead and look at all the stocks that I'm buying, the 6 stocks that I'm buying, and the 1 stock that I'm selling, which I'm going to go ahead and share with you guys now, is going to be Clorox. But before we get into that, the 6 stocks that I'm buying are right here, including Target, Disney, Domino's, AT&T, Realty Income, and Store Capital. Now, the stock that I'm going to go ahead and get rid of in this portfolio is going to be Clorox. Now, here's the thing. If we go ahead and look at Clorox in my portfolio, Clorox is actually in my consumer staples sector. And the reason why I'm actually getting rid of Clorox is because it's a very safe dividend stock that will keep paying out its dividend over time. But in general, it does not have the potential to grow. I believe Clorox has a great business model overall that can go ahead and sustain and go ahead and keep paying you out a dividend. But when I focus on dividend growth stocks, Clorox unfortunately does not fit my strategy overall. Now, when I started investing in this portfolio, this was a stock that I started investing in as soon as I started this portfolio. But again, when I go ahead and evaluate this portfolio at this point, I do want to go ahead and just focus on stocks that are going to be paying me out a dividend, but additionally, they're going to go ahead and grow the overall value of the portfolio, and the dividend is going to grow over time. So unfortunately, Clorox, I did have to go ahead and sell. I do have a current sell order for $541.60, which is basically the current value of the stock in my portfolio. So this is going to be the stock that I'm going to go ahead and get rid of at this point in this portfolio. And altogether, guys, in regards to my holdings in this portfolio, I do currently hold 56 stocks. Getting rid of Clorox will go ahead and take me down to 55, but then again, I'm gonna go ahead and add Target, so I will still be around that 56 stocks position. But these are basically all the changes that I'm making in this portfolio. These are the 6 stocks that I'm going to be buying and the 1 stock that I'm going to be selling. So that's basically going to be a wrap for this video, guys. Hopefully you guys enjoyed this video. If you are new to this channel and if you want to go ahead and keep up with all the stocks that I go ahead and buy and sell in this portfolio, make sure to subscribe to the channel down below. And guys, if you like the transparency, don't forget to smash that like button, as it honestly keeps me motivated to keep keep sharing and documenting this portfolio and sharing everything with you guys on this channel. If you are interested in trading, I do recommend M1 Finance if you're a dividend-based investor, or additionally, I do recommend Robinhood or Webull if you want to go ahead and focus on growth stocks. I will say Webull is currently offering 3 free stocks, which is the current promotion till the end of this month. So if you just want to go ahead and get 3 free stocks, I personally recommend to go ahead and check out Webull. I'll leave a link down in the description for that, as well as M1 Finance. But thank you guys for watching. Until next time, I'll see you guys at the next one.